This is Colin O'Keefe of LXBN, and today I'm joined by Stephen Berk, a trial lawyer in Washington, D.C., and author on the Corporate Observer. Today we'll be discussing Citigroup's proposed settlement with the SEC arising out of accusations they deceived investors in the sale of mortgage securities. Steve, can you walk us through exactly what Citigroup did and why they're in hot water right now?
Yeah, sure, Colin, absolutely. So what Citigroup did was, they wanted to make some extra money, and so they put together a basket of securities, subprime mortgages, things like that have been securitized over the years, and they packaged it up and they sold interest in it to its customers, probably some of its better customers. And what they didn't tell their customer, and so in doing so, they probably earned a fee, and I think it's been reported that the fee they earned was between 10 and $15 million. Nothing wrong with that quite yet, although the securities in that they sold were subprime, they were, low-grade securities. But then what they went ahead and did was they went into the markets and they shorted those securities. They basically betted against them, betted against the same securities that they sold to their clients. Now, I won't get into the technicalities, but they did that through derivatives because it's not like a stock where you can short it in the market. But they were able to effectively bet against the securities that they sold their customers.
I see. And obviously where things stand now, the Citigroup and the Securities Exchange Commission have proposed a settlement. Can you walk us through where things stand right now and just how that settlement is?
Yeah, I'm sorry to cut you off, Colin.
No worries.
So basically, people looked at this and they said this is awful conduct because you have a fiduciary duty to your clients, and what you've done is you've breached that duty by not only selling them securities that were probably not worth what they said they were worth, but then you went ahead and bet against them, which confirmed that you knew that they weren't what they were supposed to be. So the SEC got involved, and they were able to get Citigroup to agree to a settlement, which was for apparently or around $280 million, which is $250 million. So it sure sounds like a lot. And in connection with that settlement, two things were there. One is the SEC, Citigroup did not have to admit any wrongdoing. Basically, we don't admit any wrongdoing, but we're going to pay you $280 million. And two, they had a sort of vacuous, if you will, promise that they agreed not to violate the securities laws in the future, which is what they're supposed to do anyways, right? So it's just sort of an additional promise that really means nothing. $280 million is a lot of money. There's no doubt of that. But, you got to keep in mind, Colin, that this is a public bank, right? It's owned by its shareholders. So the $280 million doesn't come out of anyone's pocket per se. It comes out of the shareholders' pocket. So that's sort of the problem.
I see. Obviously, Judge Rakoff recently has had some qualms with this proposed settlement, and he's issuing, his thoughts on that. What do you think of his opinions on the settlement, and what do you think should be done in this case?
Yeah, terrific question. Really good question. So the SEC and Citigroup, on their way to a happy settlement where the SEC could say, look, we got $280 million back as a big old fine, and we can wrap this up. They ran into Judge Rakoff, who is a very impressive guy. He used to be an assistant U.S. attorney in New York and a partner in one of the big New York law firms, and is a very bold and intelligent a jurist, and he wants none of this. He has huge problems with it, and he has brought the SEC to task not only in this case, but in a prior case as well. And he wants to know a couple things. He wants to know, how can you go ahead and engage in this conduct that is just outrageous, from any standpoint, and do so without admitting liability, right?
Mm-hmm.
And one, without having somebody who's responsible. I mean, somebody decided this, right? Somebody went to their boss and said, hey, I've got this great idea. We're going to short some securities that we just sold our customers. And somebody signed off on that, Colin. Somebody said, yeah, that's fine. We'll do that. Good idea, Bill. I'll put you down for a bonus.
Yeah.
So Judge Rakoff will have none of that, and he's really taken them to task. And interestingly, I've read in the papers that the head of the enforcement division at the SEC sat through the hearings before Judge Rakoff because this really is an important issue to them.
Yeah. I mean, obviously, it's a very big thing. what do you think is next from here? Are they going to take the? Do you think the settlement's going to move through? And what do you think should be done?
Yeah, this would be speculation. My sense is that Judge Rakoff, although he's a tough guy and he's going to put their feet to the fire, he's going to at some point allow the settlement. He did this in a prior SEC case. My hope is, and this is just my personal hope, is that there's some responsibility to some individual, right? That the person that approved this transaction is taken to task, whether it's in a civil proceeding or even a criminal proceeding. But that that Citigroup, which is one of the largest banks in the country, isn't just allowed to walk away from this thing, which is for effectively a slap on the wrist. So my hope is that there's some individuals that are named, people who actually did that, because at the end of the day, and I was in law enforcement for about 5 years, at the end of the day you need deterrence. You need the next guy to say, hey, I'm not going to do that. We can't do that. I know that we can make some money doing it, but I don't want to do that. I don't want to have to tell my mother, or my grandmother that this is how I make a living. And right now it's unfortunately too, how should I say, too impersonal, too abstract, that no one really takes responsibility.
Yeah, it's very interesting. It's very interesting. Once again, that's Stephen Berk of the Corporate Observer. For more on this case, be sure to visit thecorporateobserver.com and lxbn.lexblog.com. Thanks, Steve.
Thanks, Colin. Have a great day.